What's up, everybody? Time to get through the rest of our public portfolio. In the last few videos, we've been talking about our high five public portfolio that we put in $10,000 into and continue to put $500 adding into this portfolio every single month. We've already revealed that we were invested in Meta, Amazon, Google, Visa, and PayPal. And now it's finally time to reveal the final four investments and to do a portfolio review of where these stocks are at right now, how much we're up on all of these stocks, and how much this $10,000 public portfolio is already up this year since we started it about a month or two ago. And I'm going to be honest, it's going to shock you. I know the market's been up a lot, since the lows, but man, we weren't even buying the lows in this portfolio because we didn't start this in April when we were at the lows. And yeah, we still have had massive moves and run-ups in this portfolio, and it's already looking really good. And we still got a lot of solid cash laying around in this portfolio as well. So we'll go through this. We'll talk a little bit about these stocks. Give my bull thesis, and then get into the rest of this video with the portfolio review, and we'll call it a day. So without further ado, I'm not going to hold you hostage. So I'll show you all four of them. And if you don't want to hear my bull thesis or you don't want to see the portfolio review, then so be it. But our four investments here for consumer and travel is going to be Grab Holdings, Crocs. Yes, Crocs. Health stocks, which is weighted at 5%. Consumer and travel is also weighted at 5%. Health stocks is going to be Hims and Hers. You may have saw their Super Bowl ad. Really awesome. And Oscar Health, a really solid health insurance company that's basically breaking into the younger generations, just like Hims is. So real quick to go over this. If you're new here, margin of safety is essentially if we have a fair value of X, how far under are we of that fair value? What we believe to be fair value with our conservative forecast. So how far under that are we? That is our margin of safety. Total position, so 60% position in Meta so far, 60% position in Amazon, Google, 30% position so far in Visa, 60% position completely built in PayPal, 60% position in Grab, Hims, and Oscar, and a 30% position built out in Crocs. And you see the build position dollar amount: 1200, 1200, 1200, 600, 600, 150, 75, 150, 150. Weighting 20% for the tech companies. As you see, it's a 60% weighting, 20% on Visa, 10% on PayPal, 30% finance, 2.5 on Grab, 3% on Crocs, for a total of this is 2.5 as well. So a total of 5%, and then 2.5 for each Hims and Oscar, with a total weighting of $250, $250, $250, $250. Yes, I understand you're sitting there saying $250 is not a lot of money spent on these, and especially you're only $150 in, but we are talking about a $10,000 portfolio within these health stocks and consumer travel stocks. It's only a 5% weighting overall. Our big money is in our 60% tech, and I do have this type of weighting in my community portfolio and my private portfolios as well. So what you're seeing here is very similar. I have a lot more stocks in my other portfolios as there's more money in those, obviously. So going through real quick, so we have the breakdowns here. Now going through the actual portfolio, and then we'll get into why I like Hims, Oscar, Grab, and Crocs so much. So getting into the actual portfolio and how we're doing so far this year, well, let me tell you, as of today at 1:30, we are up 23.61% overall in this portfolio, for a total gain of $1,236.47 in just a little bit over a month since we started this public portfolio. So that means if you would have mirrored this public portfolio with $10,000, you would already be up 23.61% on the year after only a little bit after a month. Now, let me remind you that the S&P 500 average return per year over its lifetime is about 8 to 10%. So we have already doubled that, over doubled that in this portfolio. Super, just absolutely amazing. And we still have $5,795.76 left in cash in case we want to go down more. If the markets want to go down more, then we'll be able to build these positions out even more. And so as you already know, our top positions are Amazon, Meta, and Google. Those are our three favorite names with the most runway, we believe, in tech, especially in the Mag 7. PayPal and Visa are our next two biggest positions, followed by Hims, Oscar, Grab, and Crocs. And this is only 10% of the portfolio overall. It's under consumer, travel, and health stocks. And just to be honest, guys, these are, I don't think they're that speculative, but they are considered speculative stocks, right? They're not an Amazon level, Google level, Meta level, Visa level, PayPal level. They're not at that type of free cash flow, net income, revenue, etc. Right? So this portfolio was started out at $10,000, is now up to $12,270. I believe we have at least one $500 add into this portfolio, maybe two $500 ads into this portfolio. And we do have 47.23% cash in this. We would have a lot less cash, to be totally honest, guys, in this portfolio if we would have started this public portfolio, say, beginning in March or beginning of April, because we bottomed out down there. All these stocks would have been closer to almost 100% built out, honestly, with how we have our valuations and where we see the 50% margin of safety is whenever we build our full position, and then just we DCA from there if it does go down further. But yeah, some crazy gains in here. 122.84% gain in Hims. So we bought Hims at $25.38. It's currently at $56.56, and it got up to about almost $70 plus again. So we were up 150% plus on this, up $184.26. So we basically over doubled our money, which is super awesome. We're talking about $150 in this name, in only 2.5% position weighting in the portfolio, now up to 2.72%. Oscar, our average cost is a beautiful $11.23. It's come down a lot. I think we're in the 13s now, still up almost 23%. We're just at $17 not long ago after phenomenal earnings. 21% here on Grab, 15% on Crocs, 15% on Visa, PayPal is 17, 18%, 13% on Google, 31% almost on Meta, and almost 24% on Amazon. So just left, right, and center, guys. There's not one stock in here there's not one stock in here that's red, and there's not one stock in here that's doing less than a 10% total gain loss. And you can see the breakdowns here on position sizing. And again, this is stringent on how much we have in this, right? So Crocs we only built out to 30%, Visa we only built out to 30%. Due to getting to a 40% margin of safety, we built a lot of these out to 60%. And like I said, if we would have been investing in April, March, would have probably been able to fill out 100% positions on a lot of these names and have a little bit less cash and be building that up with $500 ads every single month. So we could be doing even better. But that's crazy to say, as we did really, really well. So Grab, just honestly, 39% margin of safety, current price of $4.87. When we look here at the high five snapshot, if you want access to the high five snapshot, big news here, guys, big news. If you want access to the high five snapshot, we have the high five investing tier right now for $29.99 a month. We also have a amazing annual deal where you get another 15% off. And then there's also a lifetime deal as well, where you just get the best deal out there. There's a lifetime deal where you get the best deal out there. You get lifetime access to the high five investing tier. You get lifetime access to not just the public portfolio, that's for everybody, but also the high five community portfolio that you get to see all my buys and sells. You also get access to this, the high five snapshot. All these stocks down here that you see, this is my full library that is continuously growing. Look at all these stocks down here. It's continuously growing, right? It is all of my stocks. Or can you guys even see this? You can't. I don't think you can see it on the screen. Sorry. But basically tons of stocks in here: AVGO, SoFi, Hood, Qualcomm. You can see it all. You get my full library of all my high five snapshots that I consistently keep up to date with after every earning season. You know, I'm not Superman, so it's not right away, but I do keep up to date and put in the numbers. And especially if you want the numbers real quickly on something, I can get that updated as soon as possible. But not just that, guys. You are also going to get access to running your own projections. I'm giving the full access of the high five snapshot Excel spreadsheet. You get the full access to it as well. So as soon as you join the high five community for just $29.99 a month, you can not just have access to my full library, but you also get access to the full high five community library where everybody's in there punching in their own analyses, punching in their bull thesis, their bear thesis, their conservative thesis. You get access to run your own numbers, run your own projections, your revenue growth numbers, your EPS growth rates, your terminal free cash flow, your free cash flow margin safety. You get to run it all and see what stocks you love, what stocks you want to invest in, and what stocks you want to be a part of. You get to see where you should be buying them at on a margin of safety, when you should be selling them on a current margin of risk percentage, right? You get access to all that. So you get to run numbers yourself. You get access to my library, and then we're going to have a running, amazing high five community log where everybody's just going to continue to grow out and put in their own projections and all these other stocks. And we're going to get hundreds, maybe even thousands of stocks in there one day of everybody's analysis of bull thesis, bear thesis, all of it. So really exciting. You can tell how excited I am about this because I think it's just going to be a great thing for the community. I think it's such a great deal and added value to the high five investing tier where you already get courses. Now you get the high five snapshot, you get the high five snapshot libraries, the community libraries, the high five community portfolio, our leap management. We have our leaps in there. We talk about leaps that we're taking, 2026, 2027, 1 year, 2 year out option leaps on great companies that are severely undervalued that we can make massive money on by taking options as well. You get all of that and more. Due diligence, live streams, private videos from me on individual stocks. You get all that in the high five investing tier. So if you're interested, I'll drop a link right here somewhere on the video when I'm editing it, and you can come on in and join us. We have trading and 2 trading tiers above that as well, where you get even more on the trading side if you're interested in that as well. But yeah, super excited to announce that, guys. But back to Grab. Just if we look at this free cash flow yield, 12-month free cash flow yield, over 3%. That's what we love to see. The PE and the forward PE are a little bit rich, but this company is just getting their EPS together and really starting to grow it rapidly, 233%, 125% for 2026, and continuing down from there to get to $1.25 by 2035, giving you a 14% annual CAGR on this to a $18.75 10-year out target. So not just that, but you also have a 15% annual CAGR rate, $20.62. If you're running this discounted cash flow model, your fair value right now should be $8 on this company based on their terminal value, multiple cash flow, their free cash flow margin rate for the next 1 to 5 years, and then the last 5 years of this overall 10-year analysis. Already doing about $739 million in free cash flow with $2.8 billion in revenue, with a solid $650 million cash over debt ratio. So Massive company here. Looks amazing. Grab, they essentially, if I pull up my X here, you can see, if you're not following me on X, at the RonnieV show is how you can follow me. We are fastly approaching 10,000 followers. I don't know what I'm going to do yet when we hit 10,000 followers, but I want to do something big. I want to do community giveaways. I'm thinking about a possible high five community tattoo. I'm thinking about everything big. I want to do it big. 10,000 followers, guys. And we started this. We started X. We started posting. Started YouTube. Hit 1,000 subscribers. Almost 10,000 followers on here. I mean, we just started all this, guys, in September, October of last year. You guys are freaking amazing. I love you all. You guys are so amazing. I'm so glad I get to help so many of you in your journeys. It's truly amazing. Like, I'm just so geeked. I'm so geeked about helping you guys out, and just helping you guys learn investing, learn trading. It's super awesome. It's the best job in the world. It's the best job in the world. I love you guys all. I really do. Grab. So I spent $50,000 on this. Posted this in April 20th. This was a personal buy in the private portfolio with some leaps. But we just go through here. This is a thread that I made on X, just kind of giving you a little rundown of who Grab really is. What is Grab here? And we can just see Grab is a Southeast Asia's leading super app. They have ride hailing, food delivery, and financial services all built into one app in all of Southeast Asia. They're like Uber, a bank, and Uber Eats all in one app. Imagine that in America, right? That's what they are down in Southeast Asia. And they're continuously growing. They span across 8 countries. They are becoming a tech giant in Southeast Asia. Their recent Q4 earnings, just phenomenal. 17% revenue growth, 20% GMV growth, 97 million adjusted EBITDA, 11 million in profit. Their first profitable quarter too. They are just now getting profitable, and they are going to continue that, like I showed you on the high five snapshot. And if you want to read the rest of it, we go over risks, the twists. We go over a lot of different things in this thread. If you want to, again, at the RonnieV show, you can go check that out. You can finish this thread, but I just want to give you a quick snapshot. I don't want this video to drag on too long, so we're going to get into now Crocs. Crocs, everybody's been saying Crocs is a dying company. Crocs is going to go out of style. Crocs is going to die. A competitor is going to take over, blah, blah, blah. Crocs has been around for over a decade, right? For over a decade. If you saw, what was the movie? Idiocracy. If you watch Idiocracy, they were wearing Crocs in that movie. And everybody thought they were the stupidest looking shoes, and they picked those shoes because they thought they were the dumbest looking shoes out there. But now look, in today's day and age, everybody loves Crocs. My own kid has a pair of Crocs that he loves. They have a little fire truck that lights up on them. They have cars, like these cool little flaming cars all over them. He loves his Crocs. And so many other people love their Crocs for, just your normal go out, take the trash cans to the corner type footwear, right? Or, just slip them on, go out there, great beach shoes, whatever. People love Crocs. They love to be able to bedazzle them. And they acquired Hey Dudes, which my wife has a pair and I have a pair, and we love our Hey Dudes, right? They acquired them. So they have continuously been growing. They've continuously been buying back stock like crazy. You want to know who buys more stock back than Apple? Crocs. Crocs is running a business for shareholders. They continue to grow their revenue. They continue to grow their bottom line. They continue to grow their free cash flow, and they continue to pay down any debt that they have. And they have about 1.5 billion in net debt over net cash. So that's the one hiccup I can say about this company. But they are a retail company, so that's kind of normal when you're talking about all the physical stores that they have and all of the constantly changing inventory they have in Crocs. But I'll just say, phenomenal business, phenomenal growth, continue to grow steadily, and they're buying back stock like crazy, which is going to continuously make their EPS just go through the roof. And so at an 8 terminal fair value with a current and forward PE of under 8, we have $174 fair value on this name, a 41% margin of safety. And that means that I have this wrong on here with Crocs, and I need to be 60% invested this week. So I need to bump in another $75 into Crocs this week. I will get that buy order in there after I make this video. But yeah, $174 intrinsic value, a 41% margin of safety, guys. They're currently $102 per share. Their 52-week high is $165, so they did get close to that intrinsic value. I mean, they have 22% current free cash flow margin rate. I think they can get up to 25% in the last 5 years. Consistent, you know, it's not a growth beast, right? It's Crocs, not a growth beast, but we're looking at, you know, about 10% annual CAGR rate consistently to get to a price target of $250 per share. And these are from your fair value. So the fact that we're even under that, you know, just shows you that there's a massive, massive buying opportunity. And it's why I love Crocs so much. It's why it's in the public portfolio. Just a solid retail company that's continuing to buy back shares, continue to grow. They keep saying it's going to die. They keep saying competitors are going to take over. They fought off Temu. They fought off Walmart's knockoff Crocs shoes, Marshall's knockoff Crocs shoes. They fought off all of them, guys. They're still here. They are still here, still killing the game, continue to grow free cash flow, revenue, and EPS. And they're just constantly disrespected with an 8 or a forward PE of an 8. I mean, their current PE is like a 7.89. Just completely disrespected stock here. And I think it's an easy money stock. They just continue to kill it. Next up, we have Hims. Hims and Hers, ticker symbol HIMS. I've talked about this one at great length. I don't know how much more I can talk about this name at greater length. I've done previous videos on it when we're down in the 20s, even 18s. I've done a bunch of threads on it on Hims and Hers. If we go back to X, if we go up to the highlights here, we did this thread on Hims, got over 1,000 likes. That was super awesome. 280,000 people saw this thread, and I just laid it all out there for everybody. Imagine turning $10,000 into $150,000. I really think that Hims is a 10x opportunity. They have massive growth, and they're just attacking the younger generations and going after big pharma and going to be the at-home, deliver it right to your doorstep, you know, medical, everything, medicine, pharma, telehealth, everything. They got it all, guys. They got it all. The total addressable market, 500 billion for ages 60 plus for TAM, 400 billion for 40 to 60, 350 billion for 18 to 40. They do birth control, hair loss, anxiety and depression, primary care, dermatology, erectile dysfunction, sleep, fertility. Get this out of the way. Oh gosh. Hypertension, cholesterol, diabetes control, menopause. You know, they just had a large acquisition. Or sorry, not a large acquisition. They just bought out a factory for peptides. I mean, they are just, look at this growth, guys. 80% third quarter 2020 year-over-year growth on subscriptions, quarterly revenue. They are just exploding left, right, and center. They are very smooth, like not nostalgic, but very clean. Like, I don't even know how to explain it. You know, they're very younger generation centric, and people love that. I literally made this key support 24 to 26. April 26 is when I dropped this thread, guys. April 26, I was talking about Hims and Hers at $28. Guess what? They went all the way up to $70+ per share. Okay. And now they're sitting at about, let's see, sitting at about $56.56. So still basically basically a double up from whenever I was calling it out. Just such an amazing company, massive growth. We're talking about 20% plus growth, maybe even more, sometimes 30% over the next 10 years. Just they had this massive commercial for the Super Bowl. You know, they do a lot of the cheaper options for the fat shot, as some people call it. Ozempic and all these other, Zepbound and all of them. They have a cheaper version, and they actually just partnered with, I think Novo Nordisk. I'm blanking. They just partnered with some big pharmaceutical company, and that is massive. They just partnered with them for their fat shot, Ozempic, GP1. So yeah, I still believe the intrinsic value for Hims and Hers is $90 per share, which is a 37% current margin of safety from here. So I still think it's a buy right here. And the 52-week low is $13.47, almost a $12.7 billion market cap. Obviously, their free cash flow yield is below 2% now, so that should be red. And then their PE is not that great either. Their PEG ratio is below 1. They have, if you're going off of just free cash flow with a almost $200 million free cash flow, $1.5 billion revenue. If you're going basically just off free cash flow, I think they can get to $713 after in this 10-year analysis, which would be almost a 29% CAGR. You know, if you're going off of EPS, which again, it is a growth company, so growth companies are going to be more free cash flow heavy and less focused on EPS, less focused on really the bottom line in regards to EPS and getting that up. But over time, it is still a buy on the EPS as well. So just I like to put these all together: the PEs, the free cash flow, PEG, discounted cash flow. I get the CAGRs for that, EPS growth and revenue growth, discounted cash flow model, and it's a buy all day here. Just amazing growth, really taking over the industry. And Oscar's the same thing in the healthcare field. Oscar's just dumb. It's just dumb. This is lower than when I put it out on the video that I made on Oscar and the thread that I made on Oscar. This is a lower intrinsic value here, but I just want to let you guys know that I basically just went back through and I really beat them up a lot. I really beat the numbers down a lot to really make sure that, we have a solid number in here that isn't crazy. And from everything I put in here, I really beat the numbers up a lot. I have a $9.2 billion revenue right now. Their market cap's $3.5 billion. I mean, come on. What are we doing? They have a $1 billion free cash flow margin right now, or free cash flow of $1 billion. They have basically almost a third of their market cap is pulled in once a year. So in 3.5 years, they would have the equivalent of their $3.5 billion market cap. Now, Oscar is a health insurance company, so they have to keep a lot more money around. They have $1.2 billion in of net cash over net debt. Phenomenal numbers across the board, and an $87 intrinsic value based on these beaten up numbers. Just crazy here. Super undervalued. They're currently $13.80. Their low is $11.20, and as you saw it, we did that we sniped the low, $11.20, $11.23. We were 3 cents away from sniping Oscar's 52-week low. Let that sink in. You gotta love when that happens. Now let me be honest, okay? You do not try to time this market. You never try to time the market, okay, ever. Because if you miss the 15 best days in the market, you're gonna get cooked in this market, okay? But man, to come within 3 cents of sniping that bottom, super awesome there. Love to see that. But yeah, $87 intrinsic value there and 84% current margin safety. So you should be buying this one all freaking day. it's a, you know, it's a no-brainer right now. The current the risk to reward ratio is just heavily in your favor, heavily in your favor. Um, you know, there's some risks with this company. I outline them all in this thread, again, at the RonnieV show. If you want to follow me on X, this thread, the best thread I ever posted, you know, almost a 500,000 views, 1.4 thousand likes, just crazy. But, you know, I talked about this one at great length in here. Oscar's a healthcare tech disruptor making waves in affordable, accessible insurance plans. Think telemedicine, transparent pricing, and AI driven efficiency. They're growing fast and operate across multiple US states. Talked about my high five snapshot. Like I said in there, I did have $112 fair value. We dropped it down a little bit because I beat them up a little bit more, but at the same time, you know, crazy. They had great fourth quarter numbers, great full year 2024 numbers, and a really good 2025 outlook. You know, Michael Burry bought into this stock. Some other really good investors on X bought into this stock. Are bulls in this. They partnered with OpenAI. They had 660% EPS growth rate. The technicals look really great for a really big setup. Was calling this out April 18th. I was saying $10 to $13 support. We got down to $11.20. We sniped the bottom. The measured move is $28. We got to $17 in some sense after they crushed earnings the other day, or the other week. And, you know, they've come back since down to $13.80, but still way up from that $11 low, $11.20 low. Talked about the risks. But again, the risks, ACA subsidies not getting extended past 2025, current securities fraud investigation. And I'll just be honest, this current securities fraud investigation is just silly. You can read it right here. Oscar Health stock is currently under investigation due to potential securities fraud allegations, with investigations focusing on whether the company issued misleading statements to investors regarding its financial performance, particularly concerning factors like growing COVID-19 related costs and potential negative impacts on their businesses. That right there sounds to me like they didn't know what was going to happen during COVID-19, so they didn't say, you know, what was going to happen during COVID-19 because nobody knew what was going to happen during COVID-19. You know, if they misled on financial performance, like they didn't know that a once in 100-year pandemic was going to happen. You know, I'm not trying to protect them or anything like that, but I've looked at this at great length to make sure that me being invested so heavily in this company isn't going to bite me in the butt. And from what I see, this should be a whole big fat nothing burger. But yeah, just you like, again, you can go to at the RonnieV show. I've already done this video as well on hims and hers. This one got, you know, 569 likes, 166,000 views. A lot of people enjoyed this video. A lot of people bought Oscar. I almost said hims. Bought this stock based on this video. Again, that's completely your decision and what you want to do with your investments. But a lot of people really, you know, the video spoke to them and they decided to become investors, and they saw the opportunity that I see and a lot of other people see in Oscar right now. So those are the other 4 companies that I'm invested in my public portfolio, rounding out what I believe is a phenomenal public portfolio that's already having phenomenal returns of 23% plus and $1,236.47 return so far after only a little bit over a month of running this portfolio. Stay tuned, as I'm going to continue to update this portfolio, not monthly or anything like that, but I will continue to update this portfolio on my X and YouTube for everybody for free to show you how I run one of my portfolios. And yeah, you're going to see all the buys, all the sells in here. You're going to see if I trim any positions in here. You're going to get to see it all, and you're going to get to see when I add new positions to this portfolio. And I'll give you another rundown on those stocks and why I'm so bullish on those. And then any news updates on any of these, I'll continue to do as well. So, man, what a beast of a video, almost 35 minutes. Do me a favor, I didn't ask the whole video. If you made it this far, smash that like button, hit the subscribe button, come on over to X, give me a follow, let's be friends. Let me help you, and let's help each other become better investors, better traders, whatever your financial journey plan is. Let's help each other together. Let's grow together. And I'll catch you in the next video. Have a great day, guys.